Alrighty, gang. Hello, hello. Special Sunday, special gang. We're out here on Sunday. And we're going to have one of what I think will be the most productive lesson class that most of you guys will ever have. In my opinion, the RSI is one of the single most used indicators in the world, and it is also one of the single most underutilized and incorrectly used indicators as well. This thing has been around for decades and decades, and rather than dive into the history of who created it and what all blah blah blah, right? I would rather just go over how this thing functions and how you can use the RSI to your advantage. Now, when we flick on the main screen here, okay, now you guys have always seen my RSI, all right? And I know that the majority of you do not have this RSI because this is one that I've created, right? So with regards to the RSI, okay, if you're looking for one that is very similar to this one, all right, in the Discord, all right, I've linked this. I believe it's in the indicator section of the Discord. Let's just go in here really quick. I think it's in the indicator thing, and then I think you got to scroll all the way to the top. So up here at the very top of the indicator info under educational stuff is the crypto crown trading RSI plus EMA plus control zones. Okay, that is essentially identical to what you guys will see today here on your screens with this RSI right here. Okay, so let's just quickly discuss the RSI itself, right? The RSI goes from 0 to 100. There is no negative, there is no over 100. The RSI is just one of those indicators that measures 0 to 100, all right? With 50%, all right, or 50 being the center line of the RSI, all right? A lot of the time, most traders will just simply say to you, all right, if you're above the center half of the RSI, it is considered bullish. And if you are in the lower half of the RSI, it is considered bearish. And then another common term that you will hear on both the bearish and the bullish side, all right, is called overbought and oversold. On these charts, okay, a lot of people do not use these control zones, okay, these shaded box zones that you see underneath here, okay? So when you guys see these shaded boxes on my screen, a lot of the professional traders that you see and a lot of the guys on Twitter will not have these boxes. All right, because they don't know or don't understand how these control zones function. So going back and circling to the overbought and oversold zones, a lot of the time on these guys' charts, what you'll see is you'll see a line right here and it'll actually be at 30. Okay? And most traders will say that when the RSI goes under 30, it is considered, all right, it is considered oversold. Right? Now, just because the RSI goes under 30 does not inherently mean that things are oversold and that the stock is just going to go up because it's oversold. And the same thing can be said on the bullish side, all right? The bullish side, you'll typically see a line at the top of the RSI at 70. And a lot of the traders will say that when the RSI goes beyond 70, it is considered overbought. And traders will say that at overbought conditions, you seek reversal. I say, I don't know who the fuck is telling you that, but that's really, 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 really wrong. Okay? And that's what we use these zones for. Okay? So what you see in this orange zone here that I've highlighted, all right, begins at 35 and it ends at 20. This is considered the bear control zone. Okay, the bearish control zone. In here, when the RSI spends extended periods of time within this zone, it typically signals that bears have control of the price. Okay? And I will go through all of these concepts and all of these things as we continue down in through this lesson. Okay? I just want you to understand the basics for now. So typically when you see the RSI inside, okay, it can't just touch and go out. It has to spend some amount of time inside of the bear control zone in order for bears to actually have control of the price. All right? And then the same thing is said for the bull zone. So the bull zone, the upper band is at 80 and the lower starting band is at 65. And so anytime that you see the RSI enter into that zone and spend any amount of time within that zone, that means that the bulls are in control. So contrary to very popular belief, right? When the RSI goes into 70, all right? My cursor is at 70 right there, okay? When the RSI goes into 70, it is not an instant reversal signal. In fact, in my opinion, it is quite literally the opposite. When you enter, right, if you have an indicator that goes 0 to 100, okay, so this is where I'm going to start asking you guys to kind of jump in with me a little bit, all right? When you see, right, an indicator that goes 0 to 100, right, and you know that if it's 50 or less, it's typically bearish. And then if it's 51 or above, it's typically bullish, right? So if you saw the RSI at 70, would you say that that is a bullish indication or a bearish indication? What does the chat box think? What does the chat box think? Do you think that that's bullish or do you think that that's bearish? All right, so we've got a couple answers streaming in here. Seems like the majority of folks tend to think that it's bullish. And guess what, guys? I tend to agree with you. Guys and girls, sorry, I know there's some girls in here too. Guys and girls, I tend to agree with you. Right? Just because the RSI hits 70 does not inherently imply that we should be reversing. Right? Why would we reverse? The RSI is at 70. That implies that it's strong. Right? It implies that the RSI is strong. The RSI is at 70. It's telling you, hey, this indicator that quite literally measures strength, relative strength index, RSI, an indicator that quite literally measures strength is telling you that it's in the upper half. It's telling you, hey, I'm pretty strong, right? I'm doing pretty well. I'm quite strong, right? And so many people see the RSI hit 70 and then in their brains, they're like, oh, it must reverse. It must reverse. Imagine if you shorted every single time on this line where it hits 70, okay, where the RSI peaks and actually hits this line. Imagine if you shorted every time it hit that line. You would have lost money every single time. Right here, you went short. Okay, cool, went down 7%, but then you got ass blasted for 5% more, and then it actually kept climbing for another 12%. You tried to short there. You tried to short here. Okay, cool, it went down 7%, but then you got ass blasted again for another 6% higher. Right? Just because it was presenting opportunities to short at 70 did not mean that the bullish trend was over. In fact, all that this was implying to us in these moments here, when the RSI was touching 70, is it was suggesting that things are bullish. It's strong, right? The very first time that you hit 70 on the RSI here on April 8th, right? Look at how much higher the share price went. Just because it hit 70 did not inherently imply that things were bearish. Right? And too many people get lost in the sauce on this overbought, oversold stuff, when the truth is, when the RSI is at 70, it implies that there is some level of strength. Relative strength index. When that relative strength index measures 0, which has 0 strength, all the way up to 100, which has maximum strength, right? When you're at 70, that's implying that things are relatively strong. So just because it hits what people will call overbought does not inherently imply that the thing is just going to crater or come down or have a big retracement or whatever. Right? So this is where these control zones come in handy. Okay? So we've gone over the control zones. We've gone over the RSI itself, going from 0 to 100, understanding that 50 is our center line. We understand that we have zones in which bulls look for continuation and strength, and bears look for continuation and strength. And we know that when bulls enter their zone, things are looking super bullish. And we know that when bears enter their zone, we know that things are looking bearish. But what happens when price fucks around? Right? What happens when price fucks around and seemingly doesn't spend any time in any zone? Right? This is where you get those consolidative movements. Okay? And so I have now turned on all of the drawings. All right? For this session here. Okay? The first session that we are going to spend on the RSI is going to be done using the daily time frame. Okay? And then as we go through this, okay, I'm actually going to show you 3 different time frames. All right? 3 different time frames and 3 different ways to look and analyze the RSI. Okay? So we're going to have the daily, we're going to have the weekly, and then we're going to have a 5-minute time frame coupled with a 30-minute time frame. Okay, and the 5-minute one is going to be for those of you that are day trading. Now, I'm just showing you 5-minute, I'm showing you weekly, I'm showing you daily. Everything that you guys will take from today's lesson can be applied on the 1-minute, the 3-minute, the 2-minute, the 10-minute, the 15, the 30, the 1 hour, the 4 hour, the 2 day, whatever time frame you are using. You can apply this knowledge and this information. The reason that I want to share with you 3 different time frames, a very long one, a very, I'll say a larger one, and then a much, much smaller one paired with a medium one, okay, is so that you guys can understand the difference in the way that the RSI will look on something, say, like the 5-minute versus something like the 30-minute. And then also looking at this and saying, well, this is going to look significantly different than the weekly would look, which will also look significantly different than the daily will look. So we're going to look through each of these time frames, and I'm going to explain what you look for, okay? And we're going to explain how this RSI works and how we can eliminate all false signals. We can identify when the time to be bullish is, when the time to be bearish is, how we can spot reversals, how we can find long-term strength, how we can use the trend with the RSI to make life simple. Okay? So, first, all right, first what we're going to do, okay, is we're going to talk about the daily time frame. And I have set up meta on the daily time frame, okay? And I want us to focus on basically everything that's on the screen here, okay? So, with regards to meta, we are on the daily time frame, okay? And we are going to focus from this dump going forward and then into this bearish market reversal, and then into the bullish market reversal. Okay, we are going to look at how the daily functioned and how the RSI aided in making good trades. And then kind of my hope for this lesson for you guys is that you'll have kind of like your little light bulb moment, right? In which we've had the moving averages, we've had the MACD, we've had risk management, right? And then we've had support and resistance, okay? And now what we're going to do is we're going to use the RSI today, and I'm going to incorporate all of the lessons from all of the different things that we have talked about, how you can use all of these things in combination to make proper trades, identify good risk management, and how you can set yourself up for success. Does that all sound like a pretty good idea? Does that sound good to you guys? Everybody kind of with me so far? Any questions? Everybody good? Let's just make sure. All right. So guys, on the daily time frame here with Meta. All right, so Meta had this big nasty drop, right? Let's focus in over here. So Meta had this big scary drop, right? Meta had this big scary drop. And within that scary drop, we noticed that the RSI was inside of the bearish control zone, right? So within inside of this green circle, okay, within inside of this green circle, we knew that bears had control. Okay, within that green circle, you knew that bears had control. How did we know that bears had control? You saw the RSI bury itself in the bearish control zone. And not just bury itself within the bearish control zone, right? But it spent a ton of time inside of it, barely peeking outside of the bearish control zone. And when it did, it stayed underneath the EMA of the RSI. Now, why is the EMA important? Okay, so when we open up our indicator, we see that the RSI length is 14, the RSI EMA length is 21. So this line that you see that follows the RSI, okay, that you can see that's changing colors, okay, this calculates 21 candles back, and it draws an average, okay, it draws an average of where the RSI has been, okay, and when you see the RSI underneath it, that means that the average price, the relative strength, is underneath the average of the last 21 candles, right? Which is typically bearish. It's the same thing that we say about moving averages, right? When you see price underneath a 50-period moving average, we say that price is weak in the midterm. And when we see it above the daily 200, we say that price is bullish in the long term because it is above that moving average. The same thing can be said when you see the RSI underneath the EMA. When the RSI is underneath the EMA, it is suggesting that price in that moment, that the relative strength of that stock is weaker than it has been over 21 prior candles. Okay? So when you see this thing flipping color, all right, your guys may not do this, all right? But when you see this thing flipping color, all that's telling me is that this has become bullish, that the relative strength is flipping to the bullish side. Over the last 21 candles, the relative strength is now above the last 21 prior candles average. Okay, and that is bullish. All right, but just because you are above and below the EMA does not inherently mean that things are bearish or bullish. Okay, it's just trying to give you a proxy of this particular trend that's taking place. All right, what's important is where that RSI comes in to that EMA versus its relationship to the center line. Okay, so what does that all mean? We know that when the RSI is above the center line, it's bullish, right? And we know that when price is underneath the center line, it's bearish, right? And we are trend traders, right? This is what the Tits Gang specializes in, is trend trading, right? We're trend traders. And so we look for bullish patterns in bullish markets, and we look for bearish patterns in bearish markets, right? So just because we see the RSI underneath the EMA right here does not mean that we have immediately become bearish, right? We don't immediately become bearish, right? Because the trend is still in our favor, right? So if we look at the price here, if we just quickly zoom out on price here with Meta. So you've got your low, your high, your higher low, your higher high, higher low, higher high, and then this is where we saw the RSI go underneath the EMA, right? This is where it broke the EMA, and things looked really scary, right? Because it slipped underneath the center at the same time that it lost that EMA, right? That looked really scary. But then we had to use common sense in that moment. And we had to say to ourselves, well, did we enter the bearish control zone, right? We lost center, and that was really bad. But did we enter the bearish control zone? Did bears take control of price? And you can see that RSI almost perfectly, right? Almost perfectly bounced off of that bearish control zone, right? And so the time to be bearish was not here, right? The time to be bearish happened right here. And why did it happen right there? Okay? And this is how we use all these things in combination to help us identify really good trades. Okay? So, using our lesson that we just learned about the RSI, about the center line, and about the EMA, right? In this moment right here, okay, on this vertical line, all right, so I'll make this one a different color for you guys. On this vertical line right here, on the orange, okay, price rejected the EMA and began to slip underneath the center of the RSI. Now, what's different about this instance here versus this instance here, okay, is that when this rejected and slipped below the center, it found support on the bearish control zone, right? But what was different is that you actually went underneath center prior to this test and rejection of the EMA and the center line, right? You were under center, and then this rejection and rip underneath center again happened, right? This one here, where you rejected the EMA and lost the center, look at where your RSI was that entire time. It never once, right? It never once spent more than a single day underneath the center line. The RSI not only stayed above the center half for many, many, many months, right? But you were in a bullish uptrend. And within that bullish uptrend, the RSI had then entered the bullish control zone, signaling in this moment that bulls were very much in control, right? And so when we begun to see weakness, right? How did we begin to see weakness? Okay, now this is divergence. Now this will be a lesson that we're going to go into a little bit, I'll say later once we've got that class all done. Okay, but a lot of you guys are fairly familiar with divergence. Okay, and right here, we can see that there was a higher high, right? But on the RSI, there was very clearly a lower high, right? Very clearly a lower high. And that bearish divergence led to a sharp move down. But all that sharp move down was a higher low and a rejection of the bear zone, i.e. the bears don't have control yet. But when we saw this, where it rejected the EMA, rejected the center line and slipped back underneath it after the RSI had already spent time underneath the center line. This bit of weakness that you began to see between these two highs, right? Because this was your first lower high and a rejection of the EMA and a rejection of the center after you already lost the bullish control zone and lost the center line, right? That lower high with that bit of weakness combined with the RSI indicator saw a steep and drastic push down on Meta. And not only was it a steep and drastic push down, but then the RSI, after that orange vertical line, right, after price slipped underneath the center line and the EMA, price then entered, right, the RSI then entered the bearish control zone within that green circle. And within that green circle, you can very clearly see that price got absolutely rocked, right? And this suggested that bears were very much in control. They were taking complete and total control because the RSI was buried in the bearish control zone. You were under the EMA, under the center line. It was just bad, 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 right? And now this is where we're going to begin the larger lesson. Okay? Now, after Meta made this steep retracement and all of this bearish control zone time was spent in here, okay? Now the center line becomes insanely important. Why does that center line become incredibly important? After you enter a bullish or a bearish control zone, the center line is now the confirmation zone. What do I mean by that? Jackie, what do you mean by that? In this moment right here, when you had entered the bearish control zone. If bears wanted to take control and watch this thing continue to crater back down and really have a nasty move down, right? Bears needed to hold the center line. Why did they need to hold the center line? Because the center line, underneath the center line, underneath 50, is where bears have the most control, right? Underneath center is the bearish side of things. And if the RSI stays underneath the center, it confirms that bears continue to take control. At this stage, we saw that bears had control because we entered the bearish control zone. And then we saw the RSI come up here to the center line. If bears wanted to stay in control and we wanted to remain bearish, the RSI needed to reject the center line. And it did not do that, right? It did not do that. Now you guys can see I've put a little green box here. Is everybody with me so far? Is everybody with me so far? Does this all make sense for you guys so far? I know this is a little bit more, I'll say, advanced in terms of what we're trying to understand. I just want to make sure that I pause here and that everybody's still kind of with me. Okay. So we saw that the RSI broke center right here, right? So we're going to draw a vertical line. So let's get rid of this one now. So this vertical line is where price broke through the center line of the RSI. And then what happens, you guys? Why did I put a green box right there? Why in particular would I have placed the green caption box right there? What two bullish things happened at that exact place? What two very bullish things happened at that exact moment in time? There were two things. I see one answer already. I see one of the two answers already. Now, what's the other thing? Why am I highlighting this particular zone right here? Why am I looking at the RSI right there? Why did I draw the green box right there? What is so important about what the RSI did right there? There, perfect. A retest of the center line and the EMA. Bingo, you guys. So let's say that there were bears, right? Let's say that bears were watching this in this moment, right? And they were watching price roll over and they saw this gap down candle and they saw that the RSI was at center and it was above the EMA, right? Bears in this moment, what they would have said to themselves is, I want to short this because I have great risk reward, right? I can risk 6% or this prior candle high, right? And if I'm right, the RSI will break the EMA, it will break center, and then what happens, guys? What would happen if the RSI failed to get above center right there, and then it just broke through the EMA and it broke through the center line? What do you guys think would have happened to Meta right then and there? If it would have lost this right here, and we just lost this, the center line and the EMA, what do you think would have happened to the price right then and there, you guys? What do you think would have happened? Tell me. Bingo. Bingo. It probably would have made a lower low, or at the very least, it would have retested the prior low. And why would that have been? Because the bears entered the bearish control zone, i.e. bears took control of price right in that green circle. And then price would have come up to the center line, failed. It would have failed the EMA. It would have failed the center line. You would have been back in the bearish half of the RSI, and it would have basically been screaming at you, bears are in control. Right? But that did not happen. Right? And somebody literally just got instantly stopped out on a short trade. No problem. Right? But here's the big things that take place. Right? This is the big things that take place. You did two incredibly bullish things. You broke through the center and then you back tested right on it at the EMA. And you held both of those. Both of those things are bullish in nature, right? We know they're bullish in nature because you're now in the bullish half of the RSI, and you're also above the bullish RSI line that calculates the last 21 candles. You're above the last 21 candles on the RSI. That suggests that price has bullish momentum in the last 21 candles worth of time. So because we're on the daily, in the last 3 weeks, price would have been very bullish compared to the last of this. So using the last 3 weeks of price action, the RSI was confirming in this moment, confirmation. Yes, I am turning around. I am doing bullish things. I am being bullish in this moment because I am now in the upper half and I have held the EMA. But it does not suggest that that bulls have control yet, right? Because you haven't entered the bullish control zone. Beyond the fact that you haven't entered the bullish control zone, you have not made a higher high yet. Because we know that the last high was this one right here. So you have to get above this before bulls can actually have control. And look at what happens when price gets above that line. First and foremost, right? Price breaks into the bull zone here in this red circle. When it enters into the bull zone in that red circle, right? Bulls begin to take control. But they have not taken control yet. How can they confirm control? Well, on a retest, right? When we see the RSI slip below and we say, oh my God, this is so scary. It's so scary because the RSI slipped below the bull zone. But you're still in the upper half and you're still on the EMA. And if you test that EMA and you hold, right? Imagine that you just drew a little Fibonacci. You didn't even test the 236. And the thing banged off again after testing the EMA, and look at what happened. Not only did you rip into the bullish control zone, but you broke that higher high. You broke the higher high trend line. You officially made a higher high within this trending range of price action. And suddenly, things look incredibly bullish, right? Because bulls have control. All that stuff that was bearish back here ended the moment we got into the bull control zone and you made a higher high. Your focus at this stage, right, is no longer to be thinking bearish. Your opportunity at this stage, you have to now reprocess your brain and you have to say, we are bullish. Why are we bullish? We made a higher high. The RSI is in the bullish control zone, suggesting that bulls have control. Until the bears enter the bearish control zone, bulls are 100% in the driver's seat. They control price action. Every retracement is a buy the dip opportunity until suggested otherwise. And the suggested otherwise is only until you see the RSI spend extended time underneath the center line. The center line determines bullish or bearish. The control zones determine very bearish or very bullish. And so we use these zones in combination with everything that we're using on the charts, right, to come up with these brilliant trades, right? So here on Meta, okay, I'm going to explain why this was such a good trade in the moment and why bulls seek continuation. Here's where you get to use, right? So you guys remember that we did the chart patterns thing, right? You guys remember the chart patterns thing that we did? That was so fun. This is where you get to use that chart pattern lesson with the RSI. Okay, check this out. We're going to draw a trend line across these peaks in price, right? Because we can very clearly see, right? Let me just make this perfect for you guys. We can very clearly see that there's some sort of trend line that you're rejecting here, kind of rejection here, 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 here. Very clear spot where price is trying to get through, right? And you can see it reflected. Right? You can see it reflected in price. There's hesitation, 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 hesitation. And then look at what happens. The RSI only spends, what, 4 days underneath the center line? never once even got close to the bearish control zone, confirming that we are still very much in a bullish uptrend. And then look at what happens if I draw a vertical line from the day that you broke that downtrending diagonal line on the RSI. From that day forward, look at how much Meta went up. Even forget this little 2% little bitch retracement that you had. Look at that. 20% up on Meta. And you caught that because you drew that trend line and you said, we are bullish. I seek bullish continuation. How do I know, right? How do I know when the time to buy this is? Okay? This is where we're going to put everything in combination together for you guys. Okay? So you guys remember that we have the moving average lesson, right? You guys remember that moving average lesson. Now, this is where I'm going to really start fucking with you guys. This is where this lesson is going to start getting really complex. So I want everybody to make sure that you guys are with me. All right, so can you guys just say yes, no, or if you have any questions, can you just give me a little comment here to make sure that I know all of you guys are still following with me? Is all of this making sense so far? But this is where I'm going to start fucking with you guys, because this is where we're going to start showing off like how the RSI can be used with support and resistance. This is some crazy shit. All right. So you guys, check this out. We look at the moving averages here, right? And we see that, man, oh man, Meta had like two really scary candles. And on this one in particular right here, it actually gapped down. It actually gapped down a lot. And it looked really fucking scary in that moment, right? It looked absolutely terrifying, right? But here's where we separate boys from men. And here's where we separate pros from noobs. That low where the candle opened, right? You could have said to yourself in this moment, this to me is the ultimate long trade. And why is it the ultimate long trade? Well, we knew that there was a low right here, right? We knew that this was a low right here. And then we saw price gap down right here, right? It gapped down right on that red line. And so we said to ourselves in this moment, okay, well, this low can't be broken. Because if that low gets broken, the RSI is probably going to enter the bearish control zone. Bears are going to take control. We're going to make a lower low, and then Meta's fucked. But because we entered the bullish control zone, and we seek continuation, and we seek confirmation. It's a big word with the center line. Confirmation. Because we look for confirmation of good trades, we see the RSI test the center line. Yes, it goes underneath it, you guys. I see that. And in that moment, it would have looked even scarier. Because when it gapped down, the RSI probably would have been right here. But guess what you would have said to yourselves in that moment? That's the first test of the bear zone. And if you bounce off of it, you'll create a higher low. You still have this downtrending line. And if you make this the ultimate buy and it breaks this green trend line, you will make an explosive move to the upside because we are uptrending. And why am I seeking bullish continuation? Because the bulls have control. Now here's where I'm going to start blowing your guys' mind. Isn't it interesting? Okay. Here's where we would have set up the trade. This is quite, I'm not joking. This is quite literally exactly how you would have set this trade up, right? You would have said to yourself, okay, I'm willing to risk 4% and this low, right? I'll buy this at open and I'm willing to risk 4%. I'm willing to risk this going down 4%. Right? And if it holds that, it generates a higher low. And look at the percentage gain that we made. 40% by seeking bullish continuation using the RSI. Now, here's where I want to blow your guys' minds. This is where the RSI, okay? Now, what I'm about to share with you does not just imply to the center line, okay? This also implies to the top of the bullish control zone, the top of the bearish control zone, the bottom of the bearish control zone and the top of the bearish control zone, or excuse me, the bullish control zone. These lines that you guys see, these numbers that I have set these at, serve a purpose. Now you guys see right here, right? Does everybody see that these candles are underneath the daily 50 period moving average? Does everybody see that? Do you guys see those candles right here underneath the daily 50 period moving average? Do you guys see that? Does that all make sense so far? Now, tell me, you guys, where you guys see this price, what's the RSI doing? Where is the RSI? It's just underneath the center line, isn't it? Right? You guys see the RSI just underneath the center line, right? Let me ask you guys a question in this moment. Do you guys think that the center line in this moment is actually acting as the 50 period moving average? Do you guys think that that center line may have actually been acting as the 50 period moving average? And at the same time that the RSI broke the EMA, broke center, and broke towards the bullish control zone, do you think that that signaled the ultimate breakout? Do you think that the RSI was rejecting the 50 period moving average the same way that it was rejecting the center line here? Now, what's interesting about how the RSI interacts with these areas of support and resistance is that these numbers that I have set up for you guys, when the RSI hits these numbers, they generally find something of support and resistance. Wow, isn't that interesting? So let me show you an example, right? Let me show you an example. Now you guys see here on my meta chart, I have shown test 1, test 2, test 3, test 4, and test 5. Each one of those tests, okay, comes after price broke through the center line and entered the bullish control zone, okay? And after it entered the bullish control zone, you can see it come down and hit test number 1. Test number 1, okay, look at this, all right? This is where things get really fun. If we take a Fibonacci from this low to this high, and we pull this up, we draw that to the top. Test number 1, right? Look at how the RSI on test number 1, right? Test number 1, perfect touch of the center line. Perfect touch, confirmation of a bullish trend. Perfect touch of the center line. It never broke underneath the 236. Bingo bango, next high. And then it finds resistance again and comes back down. Perfect test of the center line on number 2. And what does it just so happen to find support on? The 236 from before. If we take this from this low to this high, suddenly it's the 382. The 382 and the daily 50 acted as the center line of the RSI. Then you have test number 3. Look at test number 3. It dipped underneath the center. But was it really that scary? Because that dip underneath center just so happened to perfectly find the daily 50 period moving average. Not only did it perfectly find the daily 50 period moving average, you guys, but look at it. We trade the trend. We trade the trend. This is a higher low. It is a higher low with a doji candle at the bottom of a trend in a higher low. Another test of confirmation of bullish trends leads to another significant move up in price, another higher high. It finds resistance. It comes back down. Test number 4. It holds. It's bullish. It didn't make a higher high, but it's not a lower low. So then we see this test. It's another test of the center line. It holds the center line. It perfectly aligns with the daily 50 period moving average. Bada bing, bada boom, another ripper. And then you guys can see that when this trend ended, it finally lost the center line right here with this red box, right? It finally lost the center. No more tests of the center. Now, beyond no more tests of the center, you guys can see that I've highlighted 3 touches of bearish divergence. You had this high to this high, which was a higher high, but the RSI generated a lower high. Then you had this high to this high, another higher high, but then you made another equal high or a lower high on the RSI. That's bearish divergent touch number 2. And then you made this high to this high, which was another higher high, but another lower high on the RSI, generating a third touch of bearish divergence. And the confirmation of that move came after you went through that white vertical line, meaning that the confirmation of a short trade came when the RSI broke through the center line, which is on that vertical line, meaning that the opportunity for you to go short, confirmation of that, perhaps rested right here on next day's open with a risk set perhaps at the gap of the move that it made, or perhaps you could even have a nice tight stop loss, placing it just above the daily 50 period moving average. And then you guys can see that price continued to collapse. And what did it do, guys? In that blue circle, can anybody tell me what happened in that blue circle? What happened to Meta in this blue circle, you guys? What happened to Meta in that blue circle? Somebody tell me. Bingo. Perfect. Excellent answer, Poor Life Choices. Mike Honcho, 4-6 Chris, Burke Kelly, excellent. It got into the bearish control zone and it stayed its ass in there. Right? Now, guys, I'm not going to show anything underneath price here yet. All right? Now, you very clearly already know that it went down. But tell me something, okay? In this area that I have circled in red, okay? In that area that I have circled in red, did the RSI ever get back into the bull control zone? In that red circle, did price ever get back into the bullish control zone? Okay, so tell me, guys, tell me. In that red circle, who has control based on the control zones? At that moment in time, based on the prior of what we were looking at, in that red circle, who has control? Wonderful, wonderful. Great answer, Poor Life Choices. Yes, you guys, bears have control. Bears have control because they entered the bearish control zone in that circular area right here. And then when price came up, right, we talked about how the center line, right, the center line is like our area of bears versus bulls, right? And we saw that the RSI got above the center. And so we had to say to ourselves, are bulls taking control? Right? Are bulls taking over? But we know they weren't. We know they weren't. How do we know that they weren't? Because you never saw the RSI even sniff the bull control zone. Beyond the fact that it never sniffed the bull control zone, you guys, we are trend traders. Guys, tell me what this is. What's that? What is this? What is that called? Perfect. Perfect. Lower lows, lower highs. Was there ever a reason to close a short position on Meta from the moment that the bears gave us confirmation? Tell me, was there ever a reason to ever consider closing a short on Meta, given the information that you see right here? Of course, right? Of course not. There was no reason. We never saw bulls take control. And the only time that we saw the RSI get above the center all it did was generate lower highs and lower lows. And beyond the fact that it generated lower lows and lower highs, you guys, let's use our moving averages lesson, right? Let's use that moving averages lesson really quick, right? Let's look at this, right? Look at the moving averages. We know that bears have control here, right? We know that bears took control here. Now look at the moving averages between the 50 and the 200. Look at how it gets tighter and tighter and tighter and tighter. And then what happens? You have a death cross. And then what happens to the RSI? It never entered the bull control zone. And then what happens to the RSI? Right here, it slips below center and it rejects the EMA and center. And then it generates a lower low. And then the RSI goes into the bearish control zone, guys. And then what's this? What happened right here, you guys? What's the C word that I'm looking for that happened right here? Somebody tell me, what's the C word that I'm looking for that happened right there? Exactly. Confirmation. Right? Confirmation of a bearish trend. Yes, I do realize that this was an earnings gap down. Right? I understand that this was an earnings gap down. Right? Using technical analysis in this moment allowed you that when Meta had its gigantic gap down for earnings and entered the bearish control zone after you already knew that bears had control, you could have shorted the fucking bejesus out of this thing from the moment it gapped down. And you could have literally taken that shit straight to fucking Earth's core. Look at this. You didn't even have to short the top. Even though you did, right? You didn't have to. Because you used all the technical analysis from right here, in which you saw bears take control, bulls are shit, bulls are shit, bulls are shit, bulls are definitely shit, and then bulls are super shit. And then when they were super shit, the RSI was buried in the bearish control zone. And from that moment forward, Meta never got back into the bearish or the bullish control zone, you guys. Look at that. From the moment that you shorted fucking way back here, Meta never once even sniffed the bull control zone. Look at how long this took. September of 2021 to January of 2023 before you even got into the bull zone again. And now look at Meta, right? Look at Meta now. Look at the RSI. Look at this. Guys, what does January 9th until July 20th of 2023, what does this basically tell you when you see the RSI just basically buried in the bull control zone, buried above the center half of the RSI? What does that signal to you guys? Bulls are in control and having a fucking party. And you want to see what a fucking party looks like on Meta? Look at this. From the moment it entered the bull control zone to the first time it actually basically, I'll say even really slipped below the center and showed any level of bearishness, you guys. Look at this. Meta went up 150 fucking %. And you never once had a reason to short this. Forget bearish divergences. Forget bullish divergences. Just use the RSI just as it says. It's a relative strength index. When the motherfucker is literally sitting at 65 and above for 6 months, nobody is going to argue that. Nobody is going to fight that trend. Nobody. And then we can even look at the most recent example with Meta as it stands today, right? Look at Meta as it stands today. Bulls are very clearly in control. And now your first confirmation test, look at that, bada bing, bada boom, right? And now look at what's happened. Your secondary confirmation test has rejected and headed for a test of the bear zone. Does that mean that things are bearish, or does that mean that things are still bullish? What do you guys think? Are we still bullish on Meta, or should we be bearish? What do you guys think? Based on the things that I've circled on the chart, should we be remaining bullish or should we be flipping bearish? What do you guys think? Perfect! Perfect! I'm so surprised you guys actually got that all right. Yes. I would be bullish, right? I would be bullish until I saw either the RSI entered the bearish control zone or I saw it bounce off of, let me move this out of the way here just for a second. Or I would be bearish if I saw this bounce off of the bearish control zone and come up to the center as the EMA comes through and it rejects the center and the EMA. If both of those things happened, right there is where I would begin to be bearish. Is if it bounced and then rejected again. In this moment, though, I stay bullish because bears do not have control. Yes, bearish things have begun to take place, but it does not mean that things are bearish. What happened right here when we slipped below the center and things look scary? Well, if you stayed bullish and traded the trend, you managed, right? You managed to make money. Because you bought the dip off the 50 period moving average, off of the higher low, and off the fuck you went. And the same thing could be said right here. What if it finds support right there? It bounces off of whatever fucking support this is. The RSI gets back above the center. You're going to wish that you had bought the fucking dip on Meta, right? Now, again, I'm not saying that this is going to happen, right? I'm just using this as an example to share with you guys, right? So just so we understand, right? We don't inherently become bearish just because the RSI has slipped below the center, right? When we see that the bulls are very clearly in control, as determined by the bullish control zone, we wait for the bears to take control before we become bearish. And even then, when the bears, if they did take control, we would wait for the retest. Because that retest is a back test of prior resistance. And that is where it presents the best opportunity to short. Because you can have the lowest amount of risk with the highest amount of reward. And that's how we use all of these things in combination, you guys. Right? This is how we use all of these things in combination to help us come up with ideas and plans and, trades and etc., 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 etc. Okay, so that's going to finish it up. Okay, that's going to finish it up for the daily section of the RSI. So does everybody feel with me so far? Is everybody good so far? What happens if it doesn't retest? Well, if it doesn't retest, then we continue to stay bullish. But there are very few instances in which the RSI does not retest. Like, look at once you got above here, retested here, here, here. Like, there is a decent amount of time between those time frames. But, like, look at here, right? You entered the bear control zone here, right? Entered the bearish control zone here, and then you basically, so you entered it on February 3rd, and your first test of the center line came on March 18th. And so we stayed bearish, and then that retest came, right? So unfortunately, if we miss that first trade, right? If we miss that first trade, it is what it is. So like in this instance that we're looking at over here for a short trade, right? And hoping for a retest, right? Hoping for a retest. If we wanted to short this, right? The honest truth is that if we wanted to short this before, right? What we should have done is we should have been saying, okay, I see that price has bearish divergence all through these highs, right? Sorry, I shouldn't have drawn it like that. I see that there's bearish divergence all through these highs, right? These are all higher highs. And then I see a retracement, I see a test. And I see a higher high, and then I see it come back down. And then I see it make a retest. And then I say to myself, this is pretty simple. If it rejects the bull zone, we can talk about that trend line being all bearishly divergent highs, right? Then we can talk about like this. and say that these are all bearishly divergent highs. So if I clean this up for you guys, sorry, sometimes I just too much stuff. So if we clean this up and we say, okay, well, you've got all of these highs, right? This is a high, higher high, higher high, higher high, higher high. 5 higher highs. And we look at the RSI and we say high, lower high, lower high, lower high, lower high. 4 lower highs. If we were looking to short this for the best opportunity, that is where we would have looked, right? And then in combination with those things, we'd look for a bearish candlestick pattern, right? And in this instance, you have dark cloud cover followed by your 4th or 5th touch of bearish divergence, right? This is a dark cloud cover candlestick pattern. This is a bearish reversal candlestick pattern. And so the idea being, right, is that in that instance, then you short the next candle, setting a stop loss at the prior high, and bada bing, bada boom, right? So that's an idea of how you could do this. Now, having said all that, right, if you did not take that short trade, which I didn't, right? I didn't set up anything like this on Meta, right? If I was looking for a short trade at this stage on Meta, right, I would be saying to myself, well, I want to see this come back and retest the center because I want to see it retest the daily 50. So I would like to see something like that, right? And see it come back and retest this daily 50 period moving average. And then at the same time, if it tests that and rejects that 50 period moving average, it'll also reject the center line of the RSI, and then we'll get our big nasty move to the downside, right? And guess what? This is the beautiful thing about trading, right? This is the most beautiful thing about trading. If that doesn't happen, so what? I had a plan. I had a thesis. I stuck to the plan. If it worked, great. If it didn't, who cares? There's a gazillion other fucking trades I can make. It doesn't just have to be Meta because the RSI was doing something. It doesn't just have to be Nvidia or GameStop or whatever, right? It doesn't have to be just because of this, this, and this, and this, right? You come up with a plan, you come up with a thesis, and you wait. That's why Jackie literally screams at you guys every day. Patience, 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 patience. Because I wait for price to come to me, right? That's why we found success on GameStop so far, is because I waited for GameStop to come to me. I didn't buy it here or here or here. I waited for it to come to me here, and then I buy it, right? And so if a trade works and your plan functions as it should, awesome. But if it doesn't, it's not the end of the world. There's a gazillion other fucking trades that we can take. Right? Like instead of shorting Meta, right, we did Amazon. Right? We shorted Amazon. Right now, I don't know what happened because I thought maybe it's Apple or is it Google? Which one of these has that? One of these had a Head and Shoulders. I thought, yeah, there it is. So here, all right, this is just a quick lesson on drawing patterns. Okay, this is a quick lesson on drawing patterns, all right, with the RSI. Now, a lot of people will not show you this. They won't teach you how to do this, and I will, because this shouldn't be like hidden information. You can draw fucking patterns on the RSI. Right? I'm not saying draw scallops. I'm not saying draw harmonics. I'm not saying draw fucking complex bump and runs using the RSI. What I am saying is there are 3 specific ones that I use almost exclusively all of the time. Wedges, channels, and Head and Shoulders. Okay? Now, on Microsoft, we see that Microsoft actually has a weekly Head and Shoulders forming on its RSI. You've got your shoulder, your head, and your shoulder. And the way that we measure these is all the same. Take it from the neckline to the head, right? And then you place it where that goes. And then look at this, right? The confluence suggests that Microsoft, on the weekly time frame, is going to test the center line. And we did that just simply drawing a pattern on the RSI. Now, a test of the center line, look at what happened. In the bull zone, test of the center line. Guys, what do you think happened after that orange vertical line? I'm not going to change the screen yet. What do you guys think happened after that orange vertical line? Tell me. And tell me why. right? We see it entering the bull zone on the weekly. And then we see it break down and test the center line and hold. What do you guys think happened? Oops. A boom up. Why? Why a boom up? Why would it have boomed up? What happened? Up because confirmation. I like that one. Significant price increase. Price go up because continuation and confirmation of the bulls being in control. Yes! 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 Look at it. Literally mark the bottom of a retracement before a 37% move. Right? Isn't that neat? And now you've used a head and shoulders and then bearish divergence, right? Look at this, right? Look at how easy this is. This is a lower high, right? That's a lower high. This is a higher high. That's bearish divergence. And then it lost the EMA and lost the bear zone, or excuse me, lost the bull zone. That suggests a big candle. And look at the head and shoulders play out. Boom. Now you're looking for a test of the center line. That suggests that if we do not hold the 236, it's almost a Jackie guarantee that you're going to go to 380. Why 380? Very likely that the next weekly candle, if it were to come down here, guys, remember this, right? It would just so happen to align with the center line acting as the weekly 382 Fibonacci. Isn't that interesting, right? So, now that we're on the weekly time frame, I'm going to show you guys quickly the weekly setup that I have put up on here for Tesla. Okay, so we're on Tesla weekly, back from basically the IPO days. So you guys will see that this price action that I'm highlighting for you is actually from 2013. This goes from 2013 to 2020. And everything that you guys can see here on the RSI, right? This is the weekly. So this is a much broader view, right? This is a much, much, much broader view. Now, guys, tell me, this is very simple, right? Very simple. The weekly RSI spent all of this time in the bull zone, right? Price never once, right? After making this low, after in that circled area, spending so much time in the bullish control zone, right? This low that was made right here, after spending all of that time in the bull control zone, that low right there was never broken again in Tesla's history. That was the last lowest low of Tesla's share price ever. And that came off of the back of the weekly RSI having been in the bullish control zone for the most amount of time it had ever been in. And not only that, but price never again spending more than 2 weeks in the bearish control zone on the weekly time frame. Right? Never again. And so looking at this, you guys can see that I've drawn a couple of things for you, right? You can see the first weekly center line test after breaking above into the bull zone, right? First weekly center line test, huge explosion, right? Huge explosion. 115 fucking %. And then your second test, 55%. And then it slips underneath the center line. But guys, tell me something. Where I have placed this white box and where I have placed this white box, tell me, did the RSI ever spend any amount of time in the bear zone beyond like a single week? Beyond a single week, was there ever any amount of time spent in the bearish control zone? Yes or no? So guys, tell me, if you're going to answer no, then who has been in control of Tesla's share price since October of 2013? Tell me, who has been in control of Tesla's share price since 2013? Perfect. And guys, tell me, who is in control of Tesla's share price as of today, based on what you see? Based on what you guys see using the RSI, who is currently in control of Tesla's share price? All right, perfect. Now, let me ask you guys one last simple thing. You guys see back here, right? You guys know that I was talking about drawing patterns, right? You know that I love drawing wedges and channels on charts, right? Tesla, all right, Tesla is one of the most unique charts in the world in which this thing on the weekly forms weekly RSI wedges almost exclusively before it makes monstrosity breakouts, right? You see this one that happened right here that formed? Look at the size of this breakout. 100%, right? And then you can see this right here. Right? Another huge, huge, huge move. I know it doesn't look like much, right? I know it doesn't look like much, but 40%. Okay? Now, let me ask you guys. Let me ask you something very, very, very quickly. Tell me, you guys. Do you see anything interesting about Tesla's weekly RSI as you currently look at it? Is there anything that catches your attention? Anything at all about that weekly RSI? Let's see if somebody can figure it out. And why Jackie's so bullish on Tesla. Ah, yes, there we go. There's a couple people. I see it. All right, so guys, right? When you see these wedge structures happening on the RSI, doesn't matter if it's the weekly, the daily, the 1 hour, the 30-minute, the 5-minute, the 1 minute, the 30-second, okay? None of the time frames matter in this instance, okay? All I want you guys to know, all right, is these wedges. What these wedges are, okay, is that clinch fist theory that I have shared with you guys before, right? In which I have shared with you guys, okay, I want you to clinch your fist for me right now, okay? And then very slowly, I want you to clinch it tighter and tighter and tighter until you can't anymore, okay? And then the moment that it reaches a point where you quite literally cannot clench your fist any tighter, you have to let it go, right? Because it hurts, right? There's too much pressure. There's too much pressure, right? When you see wedges and channels forming on the RSI, that is essentially what is happening, okay? Is that price is constricting and constricting and constricting and constricting, and the price range is getting tighter and tighter and tighter and tighter and tighter, and price is squeezing, 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 right? And how do we know that that's what the RSI shows us? Because the RSI shows us relative strength. And when you see the relative strength almost making a stair-stepping style movement, it is essentially signaling to you, right? It is essentially signaling or trying to tell you, hey, somebody is kind of building this up like a coil. And the closer that we get to the bottom of this, the more tightly coiled this spring is being loaded, right? That's what these wedges, that's what these channels, that's what these movements on the RSI are trying to tell you. And so when you see something like this happening on Tesla, right? When you see something like this happening on Tesla, you cannot deny. You cannot deny it. Bulls have control of price right now. We know that because of this entrance to the bullish control zone, and this quite literally only, 4 to 5 weeks spent in there is basically a wick and back out. Bulls are in control. We know that bulls are in control. Not only do we know that bulls are in control, but if we look at the RSI, it is suggesting that there is some sort of coiled up, very large move beginning to take place. And Tesla is right near the end of seeing a very, very, very explosive move, right? Now, using this wedge in combination with technical analysis, we make things easy, right? We make things easy for ourselves. and we say, okay, Tesla, right? Tesla on the weekly has this low and this high. And so long as you stay above this low, we continue to be in a bullish uptrend, right? How do we know we're in a bullish uptrend? Well, if we go to the monthly, we can see on the monthly, if we turn off all of the drawings, very clearly low, high, higher low, higher high, higher low, then we look for a higher high. This is in fact a lower low, but it's the same lower low that was printed, same lower high that was printed here before a higher low and an explosive move. And so we know, in combination with this trend and this weekly RSI structure, in combination with the fact that we know that on the daily time frame, Tesla is within dollars of completing this macro gap fill, it would seem to make sense, or at the very least suggest, that Tesla is preparing for an absolutely explosive move to the upside in the relatively near to short-term future, right? And we just essentially, if we are looking to trade this, right? If we are looking to trade this, it's very simple in my eyes. Because Tesla is at the bottom of this RSI wedge. It cannot go much lower. Beyond the fact that it cannot go much, let's actually draw this correctly. Beyond the fact that it cannot go much lower, we do not want to see the weekly RSI spend time in this bearish control zone. We don't want to see that. So if we were to set up a trade, in my opinion, it seems easiest to me to draw a Fibonacci from this low to this high. Identify 886, 786, and any supports in between. There's not really a ton of support in between, so we only know that there's that gap fill. Well, in my opinion, I would say that I would put on a long position at the gap fill. I would throw on my Bollinger Bands. I would say, where do they rest? And I would say, okay, I'll place my stop loss right near the band. So I'll place this right around here. And so that puts me at a stop loss of 7.25%. And then my idea is to aim for the gap fills higher. Gap fill 1 being at around 187. And then beyond that, I mean, things just start getting nutty. But this trade offers an opportunity of a 4-to-1 risk-reward ratio with a very clearly defined purpose of why I would take this trade. Now, I also just realized that I put the entry above. So that's actually where I want it. So all of that, right, is being used with the RSI and this structure that we see here in combination with the trend that we're trading. Maybe even what I could do, right, is pull a Fibonacci from this low to this high to give me some support and resistance in between those spots and say, well, there's a golden pocket here. And price could potentially go all the way down here. So maybe I have to kind of give myself a big extension of a stop loss. Maybe I'll put this at 10%. Because it gives me a safe entry from that golden pocket if it were to come back down there, right? And maybe I could even pick up an entry. But in my opinion, this is too wide. If Tesla hits that gap fill, it's got to bounce then and there. Otherwise, it's going to break the low side of this channeled structure on the RSI. You're going to enter the bear control zone, and then Tesla could actually go and make a lower low, and that would be shit. So for a bull's perspective, this is how I would personally be setting it up. 5% stop right at the entry of the gap fill, and then it's got to boom. And you'll know if you're wrong because the RSI will just completely collapse on the weekly. Right? So does all this kind of make sense to you guys? Is this helping you all a little bit? And so the final piece of the lesson, so not, I don't want to go too much longer here. Let's see how futures are opening up. Wow, futures open up big green. Nice. 0.25% on SPY, 0.5% on RTY, and 1/3% on NQ, so tech. So that's good. Dollar down, bonds literally break even. Interesting. So the last piece of the lesson, you guys, is going to be spent on the 5-minute. And I'm not going to spend a ton of time. This is just mostly for my day trading gang and for those that are interested in this kind of thing. Again, with patterns and trend and, you know, just aligning yourself with the trend. You guys can see that I've put green circles for uptrend, orange when there's potential shift, and then red when you've got downtrend. All right. And you guys can see using the RSI, right? So we knew that down here, okay, so I just want to focus on this because this will be the easiest to explain versus everything that we've looked at. So back down here, you actually had an inverted head and shoulders on the RSI, on the 5-minute time frame. You had an inverted head and shoulders. And then we measured that move, and it broke out after bullish divergence, and you exited the bearish control zone. But right up here, you rejected the bull zone, right? And when we rejected the bull zone, you guys, what does that suggest? When we reject the bull zone, right? What does this suggest when you have already entered the bear zone and now rejected the bull zone? What does that suggest to you guys? Does that suggest that bears are in control, or does that suggest that bulls are in control? Perfect. 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 Yes, 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 yes. Right? And then you guys can see from the moment you rejected that bear zone, look at your 200 EMA. Your 200 EMA was quite literally your bull zone entrance. And you could have said, if it broke that 200 EMA, we go long. And if it fails, we short the fuck out of it. And then look at from the moment that you entered that bearish control zone. Guys, how many times did you enter the bull control zone from that blue circle to this blue line? How many times did you enter the bull control zone? Somebody tell me. Quick, quick, quick. Poor life choices. Perfect. Literally zero. Literally zero number of times. You entered the bull zone 0 times from the moment the 5-minute entered the bearish control zone to the moment that we finally begun to break this fucking downtrend. The bears kept control the entire fucking time. Every test of the bull zone was a fat fucking rejection. Not only was it a fat fucking rejection, it was a lower high, lower high, lower high, lower high, lower high, lower high, until it finally wasn't. We had, in this range, 0 reason to go long. Absolutely none. And it's the same lessons that I share with you guys here on SPX, right? These are the same things that I apply while I am day trading SPY, right? These are the same lessons that I apply when day trading SPY, right? Look at this wedge that formed on the RSI. And then look at the huge move that we caught. $4 up on SPY from the break of this wedge, right? And then look at it touched the bull control zone. So we knew that bulls had some kind of strength. And then we saw a rejection and it broke the center. And we were like, oh my God, are things really bearish? And then you guys remember we went short on Thursday. That's because we got into the bearish control zone. And then you rejected the fuck out of center. Rejected the fuck out of all those EMAs. Die, 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 die. And then you entered, again, the bear control zone. Reject the center, reject the center. Die, 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 die. This is how we use all of this shit in combination. Right? This is how we use all of this shit in combination. Right? This is how I protect myself from getting beat the fuck up on SPY and SPX and all this bullshit. And not only, right? Not only do I use the 5-minute, but then I also use some larger time frames from time to time to help me out, right? So when we looked at this inverted head and shoulders down here, and we wondered, hey, is SPY going to become bullish here? Are we going to break this downtrend? Are we going to break out here? Well, if you use the 30-minute in that same moment, you guys, look at what happened. The 30-minute entered the bear zone, literally came up perfectly, rejected the center line, perfectly rejected the 30-minute 50-period moving average, lower low, lower high, die, die, die. And all of that just gets used in combination. A 5-minute, a 1-minute, a 30, a 15. I don't give a fuck what time frames you pair with what. It's whatever you find is best for yourself, right? But using a little bit of a larger time frame while day trading in combination with the things that you're going to learn about the RSI today, right, on smaller time frames, can help you stay aligned with the market. Right? You guys can see in that red box, the RSI quite literally never entered the bull zone. It did here for on a gap up on the next morning. It gapped up the next morning and then literally died and made another lower low. And then finally over here, you completely entered the bullish control zone. Bulls finally had control, begun to form an uptrend. And then look at here. Perfect test of the bearish control zone. Rejected the fuck out of it. See you later. Higher high, higher low, higher high. Ooh, question mark. Ooh, question mark. Right? A little entry of the bear zone. Little entry of the bear zone. But then you broke center. Broke the EMA. Broke into the bull zone. Made a higher high. That's a bull trend. Don't short that. Not until you're given reason to do so. Right? So this is how I use all of this shit in combination. Right? Like, I'm not going to argue with you guys if you're telling me that it entered it once or twice or whatever, right? But is this really an entrance? Or this, or this, or this? It's just, I mean, you guys would call this a rejection if you saw it wick into the daily 50, right? Like, if you saw this wick at the daily 50 like this, you guys would say that this is a rejection. You guys wouldn't call this an entrance. Even this, right? Like, yes, it did enter it, but did it spend any amount of time in this? This is 5-minute candles, and it entered here at 8 o'clock and then exited at 8:10. You literally spent 10 minutes in the bull zone. 10 minutes. While also forming a lower high and rejecting the 200 EMA on the 5-minute. So I won't argue with you guys that, sure, one or two times that it did, I'll say air quotations, enter. But did it really? Or wouldn't you guys just call that a rejection? Because, like, if you guys saw that on the daily 50, if you saw price come up here and then just slightly wick above it and then dump, you wouldn't say that it just got above there. You would say that it rejected, right? So that's just kind of the point I'm trying to make about that. Yeah, like, that's exactly right. It would be different if we set a higher high and then the RSI actually spent time in there, right? This is the difference. This right here is quite literally the difference between this and this. The RSI gets in there and then it stays in there. It doesn't just go in there for like 6 minutes and then disappear. The RSI got into the bullish control zone at 7:30 and did not enter the bearish control, or excuse me, did not exit the bullish control zone until 7:30 2 days later. Right? And then even when it exited, all it did was test the bearish control zone and use it as confirmation of the bullish uptrend. It formed a higher low into a higher high. And then that higher high, yep, we barely entered the bullish control zone. But this right here, this zone right here told us bulls are in control. This confirmed that bulls were in control. So even if you don't necessarily enter the bullish control zone, again, we're on a tiny, tiny time frame. Just because you don't necessarily enter or stay in it afterwards does not inherently imply that things are bearish. Right? We stay with the trend. We stay with what we know. This says bulls were in control. This confirmed bulls were in control. This staying outside of the bearish control zone suggests that this whole time bulls were in control. And if we look at price, bulls were the whole time. Bulls were in control. The whole time. $67 up on SPX, 1.5%. Bulls are in control. That's control. And that's all suggested through the RSI. And that's how we use this thing to make or break really good trades. And then you guys can understand, right? Now you guys can understand how to use all of these things in combination with moving averages, with the MACD. Right? Look at this, okay? Let's open up the MACD and let's just break everybody's brains for half a second. This low right here, right? This low right here that looked really scary, right? You had your high, low, higher high, and then you made this, which was a lower low, comparatively speaking. It looked really scary, right? But at the same time it looked scary, you had multiple touches of bullish divergence, right? Multiple touches of bullish divergence. Okay? And then beyond the fact that you had multiple touches of bullish divergence, had you really broken trend yet? Right? Could we really just say that this is our low and that this is a higher low? And then when we add in our MACD, on the 5-minute, we said, whoa, that MACD was crossing right near the center, and then it crossed right here. And then when it crossed, the RSI exited the bear zone and got above the EMA. And then what happened right here? It back tested the EMA and used it as support. And then you got above the center line right there. And then when you got above the center line, you started breaking above all of the EMAs. And then when you broke above the EMAs, then right here, you got into the bull control zone. And when you got into the bull control zone, we knew, right? We knew from the moment that we had spent all this time in here and bulls were in control, between this bullish divergence and rejection of the bear zone and this now confirmation of the entrance of the bull zone, suggests higher high into a higher low into hopefully a higher high. Hopefully that bull trend continues, but we take advantage of this bullish move while day trading. All right, so does all of that kind of make sense so far, you guys? Does that all kind of get put together for you? Does that all kind of, you know? With the RSI and its EMA both being in the bull zone signal strength? Well, yes, because the EMA is a measurement of the last 21 candles, right? And so the higher that EMA is, the higher the suggestion that price over the last 21 candles, right, has been relatively strong. That's what the relative strength index measures, right? So yes, when it is in the bullish control zone, when the EMA does enter the bullish control zone, it does signal a heavy amount of strength. And when you see the EMA in the bearish control zone, it signals the same on the bearish side. It signals a load of strength on the bearish side. Interestingly enough, Maple, you'll see that when the EMA enters into the bull or the bear zone, that actually has typically led to macro signals of trend shifts. Shh, don't tell anyone. So can we get a bunch of GGs and TGs in the chat, gang? Can we get a bunch of GGs and TGs in the chat? Because I think that is probably going to conclude it for the RSI lesson. We've gone for an hour and a half now. So we've had, this is a pretty good session so far. Pretty good session. So give me those GGs and TGs in the chat. So if you feel like that helped you out at all, feel free to let me know in the comments. I love hearing from people, making sure that you guys actually use this and this stuff kind of makes sense to you. I don't think we have any more classes for now, so this is the next class session thing that we've got set up. So we've got the divergence lesson. So the divergence lesson, we've got 450 of the 2,000 needed so far. And then the harmonics lesson, we're 350 of the $10,000 needed so far. So those are going to be the next lessons that we do. But for right now, today for the RSI lesson, that's the last one that we have set up for now. So. Right. So somebody wants me to look at NQ, I guess. I love the demands. It's my favorite. So pretty simple here, right? Pretty simple here. This is all very much bearishly controlled, right? Very, very, very bearishly controlled. And so we look or seek for rejections, right? We look for rejections of very bearish downtrends. This is very clearly a bearish downtrend, right? And if this is in fact a high, then why wouldn't we short this, right? Right? Why wouldn't we short this at this stage? Right? And the reason that we short this here, okay, is because we're in a downtrend. And we see that the RSI is right at the bull zone. And if we want this to remain bearish, we need to reject the bull zone. Because if bulls take control here, they're going to retest this prior high. Right? They will retest this prior high. So from a risk-reward perspective, right, this makes a ton of sense for us to short here. Right? And then where could we place our stop loss? Well, we're in the golden pocket, so we can place the stop loss just above that golden pocket. Okay? And then if we do reject here, then we're looking for a lower low because we're in a bearish downtrend. Right? We're in a bearish downtrend. And if the RSI on the 5-minute time frame rejects the bull zone here, you will see a sharp move to the downside. So we'll place this at this prior low. Okay? Now, beyond that, right, then we use larger time frames to help aid trades. Right? We use larger time frames to try and help us aid this trade. So we're going to open this up. We're going to go to the 30-minute. We're going to go to NQ on the 30-minute. We're going to say, where is NQ on the 30-minute? Well, if we look at this, there's a touch of bullish divergence, okay, inside of the bearish control zone. So we see that touch of bullish divergence. But then we can also see something very clear taking place. Something very, very, very obvious. On the 30-minute, this is a very large touch of potential bearish divergence forming right here, right? Because we can very clearly see. Now, I know that there's like a gazillion fucking lines on here. Sorry. So looking at the 30-minute, we say to ourselves, well, this is a golden pocket. And the 30-minute has a potential test of bearish divergence. I'm willing to bet if we go to the 15-minute, it's probably testing the center line as we speak. And it is. And so from a risk-reward perspective, pretty fucking simple here, right? If it breaks this golden pocket, it's going to test these prior highs that were made here, right? And so we keep a stop loss just above this golden pocket. And then we say on the 15-minute, well, if the 15-minute rejects the center, you're going to have a huge touch of bearish divergence. Combine that with the 5-minute rejecting the bullish control zone, signaling that bears are still very much in control, right? We would anticipate that this would make a move back towards the downside and potentially retesting these prior lows. Okay? Now, beyond that, look at our MACD. Our MACD on the 5-minute could potentially cross right near the center line. Beyond the fact that it could cross right near the center line, we have a large touch of histogram bearish divergence of these highs. Okay? So, with this, right? This right here, right? This is a higher high compared to this. But looking at the histogram, right, this is actually a higher high on the histogram on this side. So this is a touch of bearish divergence. With that touch of bearish divergence, with the 5-minute potentially rejecting the bull zone, with the 15-minute potentially rejecting the center line of the RSI and the golden pocket, this is a fantastic opportunity to short. Now, the reason it's a fantastic opportunity to short is simply put because the risk reward is fantastic. Right? You're aiming for the prior lows with a stop loss of quite literally less than 0.1%, right? Whereas a bullish trade is not suggested in this regard because your risk to reward of what you were trying to aim for, where do we put this for risk? You can place it here and then look at your reward though. So this is only 2.37 risk reward ratio, whereas this one is 8-to-1. Suggesting that the trade is definitely much more in favor of the bear side, right? So is it going to work out? I have no fucking idea, right? We're already in profit, so we could probably just go ahead, lock in one of those, right? No problem. There's a piece of profit locked in, right? And now if it makes the huge flush, sweet, we're going to get paid. And if it doesn't, we're going to get stopped out for $0 because we just locked in the same amount of profit that we'll lose if it triggers our stop loss. That's how you fucking trade. It's quite literally that simple. And this is about as live as a potential thing as I can show you guys in real time. So in real time, we're seeing the 5-minute potentially reject the bull zone. We're seeing the 15-minute potentially reject the center line after a touch of bearish divergence and an entrance into the bear zone, suggesting that the center line test is confirmation of what, guys? Confirmation of what? Thank you. Thank you. Confirmation of trend. Simple. Wonderful, you guys. So does that make sense? Does everybody kind of rock with me? Does everybody kind of make sense there? Is that all good? Right? Is it all good? Does that make sense to you guys? So root on the 4-hour may have. It might. Yeah, it might. It certainly might. What does the weekly suggest? Well, the weekly still hasn't even exited the bull zone quite yet after spending an extended period of time above it. So for me, I would say that maybe the weekly needs to come down and test the center line to truly confirm its bullishness. But having said that, what Bananito is saying there is that the 4-hour is in the bull or the bear zone, but just barely. And if it manages to bounce out of this, all this time spent in the bullish control zone on the 4-hour will suggest that this trend can continue, this bullish uptrend. And this bullish uptrend, I mean, here's your low, here's your high, here's your potential higher low, and then there's your potential higher high. Right? Simple, simple. That NQ. No, I don't. That's it. No more. I got to do some videos for you guys and put together some stuff here for GameStop and for the market. So I don't have any more time here, guys. So that's it. So let's get those GGs and TGs in before I get ready here. Neighbor's got his big ass car. Fucking brum, 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 brum. All right. Great, great, great. So, wow, the chat box is so slow. So we've got Alex Cordo. Oh my goodness gracious. Why is the chat box so fucked? We've got Maple, Luke Bowerman, Calvin, and Mick the Jip. Diamond Tech, Scott Baker, Alexander Flanner, Cold Grape Sodas, Megatech, SJ, Scott Baker, Brian Ballas, Stoney, David Trinidad, Chang Chang Gang Gang, Paluz, Carmen, and Benedito, and Cooking Count, Stoney. I think I said Stoney again. 4-6 Chris. Who else do we got in here? Jay Fern. Jay Fern. And who else am I missing in here? And Coolian. And Burr Kelly. And Kevin Gobellion. And Brendan Robinson. Good to see ya. John Ha. Good to see ya. SJ. Richard. Who else? Mike Honcho. Good to see you, buddy. Mike Honcho. I think that's pretty close to everybody, right? I think that's pretty close. And then Poor Life Choices. I almost missed him. He was a great, great person in the chat box there today. And David Stevens. Yeah, buddy. Good to see you, man. So, guys, hopefully that helped you feel like you've put a new wrinkle on your brain. Hopefully that made you feel like you've put a new wrinkle on your brain there today. This is definitely some, I'll say, higher level stuff, right? There's no ifs, ands, or buts about it. This is some higher level stuff. And the fact that you guys are picking up on this as quickly as you are and kind of understanding what's going on, I'm genuinely impressed by you guys. So keep up the great work, guys. Honestly, keep up the great work. And, as we go through this week, you guys should be messaging me and posting in the members charting room. And you guys should start showing me all the things that you learned and how you use all this stuff, right? I want to see it. Even though I don't reply all the time, or guys, because my schedule is just like I'm jam fucking packed every day during the week. So if I don't reply to you or you feel like I'm ignoring you or something like that, it's never that deep. I straight up, I like my fucking schedule is mashed. I just don't have a lot of time during the week. So guys, I want to see some stuff posted in the members charting room and stuff this week from you guys. I want to see, what you've learned from this. I want to see that this is all kind of making sense, and I like to see that, it's not just yes, 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 yes. I want to make sure that these lessons are really driving home for you guys, because these lessons that you guys learn are going to be shit that you guys can use quite literally years and decades down the road. Trading is never going away, right? Just because the market's a piece of shit doesn't mean that trading is going anywhere, right? And then everybody's screaming at me, check the fucking PP. All right, give me a second. I don't have my phone here. Oh. All right. So we've got $5 from Poor Life Choices, saying another great lesson, brother. All the light bulbs went off. More donos to come once we can apply them effectively. Appreciate all your hard work every day of the week. You're the best. Love you, man. Thanks a lot. Appreciate that. Poor Life Choices, legend. Yes, Calvin. And then we've got Maple with the $25 bomb. Says $25 towards the harmonic lesson. You got it, man. All right. Yeah, anything that has organic price movement, you can use this RSI stuff that I've showed you here today, right? There's a reason that I keep showing everybody this fucking RSI wedge on Bitcoin, right? I have no fucking idea why everybody and their sister wants to be bearish. Bullish control zone, multiple weeks spent in the bullish control zone, never even sniffed the bear control zone. And now you have an RSI wedge the same way that you had here, in the same way that it didn't even sniff the fucking bear zone before it exploded. Same thing here, and then look what would happen. If this thing fucking breaks out, you're going to break the center line, you're going to break the EMA, and you're also going to break the wedge. This thing will fucking explode if it breaks through this overnight tonight. And I don't know why motherfuckers want to be bearish on crypto, especially when the shit looks like that. And now, given all the lessons that you guys know about the RSI and how to apply this kind of stuff, I think you guys can understand, like, holy shit, man, maybe crypto really is about to go fucking stupid. Right? And I just don't understand the obsession with wanting to be bearish on shit that's, like, literally at fucking all-time highs. But, fuck. Have at her, man. But, yeah, sheep to the moon, 100%. And then I also just got another $20 bomb for Mr. Romer. Mr. Romer says, all your work is appreciated. Thanks, G. No, thank you guys. Thank you guys. So here's what I'm going to do, okay? Guys, I'm going to close this lesson, and I'm going to make this unlisted, so it's only for the Discord members, all right? And then I'm going to quite literally in the next hour, I'm going to do a live stream going over the market. Okay, we're going to look over SPY, NASDAQ, Russell, and then a couple of the small cap stocks. And then I'm going to make a GameStop video. So come back in like another hour to the Discord, and I'll have another live set up for the weekly outlook. Okay, and then we will do the GameStop video. I will have that out for you guys tonight. And a lot of exciting updates for the GameStop video tonight. Lots and lots and lots of excitement taking place on GameStop here this week. So, guys, thank you all for tuning in. This has been a blast. I really appreciate you guys always tuning in and listening to these things. I mean, people spent literally $5,000. Speaking of which, let's make sure that we get all those folks a big round of applause here before we take off. So, with the RSI lesson, Kevin Gubenlian, Maple, Poor Life Choices, Richard, Buns McBull, Sky Daddy, Crazy Chris, big rounds of Crazy Chris applause, Nice Afro, and Christy. And then there's a whole slew of members that had some $50 and $100 ones in there, you guys, that I was taking from YouTube and whatnot. You guys know who you are, right? We've also got Cowboy in there. We know that Cowboy fucking donated in there. Who else am I forgetting? There's probably a couple other folks that I'm forgetting. Trying to think. DRR, I'm pretty sure, donated to some. Nobles, Bye Bye Shorters, Burke Kelly, Tristan Walter. There's been a whole bunch of you guys that have donated to this RSI lesson. So big round of applause to all of those folks. Because of those folks, the members that are not as well off financially were able to attend things like this and learn how to expand and grow their technical analysis, right? So I really hope that the folks that that didn't contribute to the lesson payment, not that you're bad or anything, I just hope that those folks really go out of their way to show some appreciation to Kevin Gubenlian, Maple, Poor Life Choices, Richard, Buns McBull, Triza, Crazy Chris, Nice Afro, Christy, Sky Daddy, Coolian, who am I forget? Cowboy. Big shout out to Cowboy. And then Sam Monaco. Also, don't forget Sammy the Bull. We've got Sammy. And then Unboring Time, Dingle Gary, GameStop Pharmacist, Mr. Alternator, 50, Dean Lycos, Robert Santiago, Cali Ape, Mr. L. Jackson Areno. So honestly, guys, if you didn't contribute to the payment of the RSI lesson, don't feel bad. The only thing I ask is that you really go and extend some appreciation for those folks, because without them, not only would this lesson have not been happening, but a person like Jackie would not be here today doing these lessons. Without your guys' support with the donations and the PayPals and everything else, I would not be here doing this with you guys. So I am genuinely very grateful and very thankful for every single one of you that continues to pay it forward with these classes and courses, as well as send in your appreciation every week. So I look forward to more, and hopefully we have a fantastic week. And I'm willing to bet that GameStop is going to make a lot of people excited this upcoming week. So I'm looking forward to that. So thank you guys all for tuning in, and I'll see you in an hour or so.